Can you assure lawmakers that your platform will not be manipulated ahead of the next election? Did you talk about possibly breaking up Facebook? Did you talk about privacy legislation? Are you hopeful that it will come to the floor before the end of the year? Are you ready to deal with California's privacy legislation?
That was our own Elon Moy doing a valiant job.
Very good effort.
Facebook CEO Mark Zuckerberg trying to get him to answer some questions. This after he met with lawmakers on the Hill. Did you get any answers from anyone today, Elon?
Well, we got a couple of answers from the lawmakers, not from Mark Zuckerberg, Melissa. We know that Zuckerberg met with at least 3 Republican senators today, Mike Lee, Tom Cotton, and Josh Hawley. And we found that each meeting lasted about 30 to 45 minutes. And Zuckerberg did not answer questions from reporters at any point this afternoon. But the senators were a little bit more talkative. Mike Lee said that they discussed bias against conservatives, antitrust regulation, the Section 230 liability shield, and data privacy. Meanwhile, Josh Hawley said they had a very frank conversation, and the senator told Zuckerberg straight up that Facebook should sell off WhatsApp and Instagram. Apparently, Zuckerberg was not very receptive to that idea, though. But Facebook has outlined 4 areas where it wants to engage with Congress and with regulators: harmful content, election integrity, privacy, and data portability. Now, Hawley was skeptical of some of those ideas, particularly around industry-led frameworks for privacy or data portability. He said he did not get any firm commitments for changes from the company and that there's been a lot of talk from Facebook, but not a whole lot of action. Melissa, Zuckerberg will still be in D.C. tomorrow. We will see where he goes next. Back over to you.
I presume you'll be on his tail, Elon.
We'll do our best.
Okay. Elon Moy in Washington for us. Thank you very much. Senator Lee is very important. He heads the Senate's antitrust committee here. What's at stake here? I mean, Tim was saying that if the market goes higher and growth participates, Facebook should ride the rally.
I think it's pretty interesting that Facebook and Alphabet, for all intents and purposes, are trading within a few percent of their all-time highs. The headlines keep coming. They got 30 states attorney generals. You got the FTC, the DOJ, Congress all over their tails, and the stock act well. And I think that we've been talking about this all year long. Facebook's earnings estimates got cut dramatically for 2019, starting late last year, mid-year to the end of the year, and expectations got really low, and it just looks really cheap, especially when sales are expected to continue to grow at 20% plus a clip. They are not selling off those different groups or anything like that, and their moat just gets bigger.
Yeah, this is his first appearance on Capitol Hill since those hearings, right, of 2018.
Right, and you can make the argument that actually bad news could be good news for Facebook. I mean, maybe it's a more valuable entity if they happen to break it up, whatever it looks like there. So to Tim's earlier point, I mean, it pains me to say it, but it actually has traded well since April. It's made basically higher highs, higher lows. You wonder into, I think, the October 30th release they're about, does it continue to trend higher into earnings? I believe that it will, and it's going to retest that all-time high, which was 222 or thereabouts.
All right. From Capitol Hill to Wall Street, the 9th annual Delivering Alpha conference taking place right here in New York City today, where the who's who of the investment world share their top ideas. Let's get to Leslie Picker with all the highlights from today's event. Hey, Leslie.
Hey, Melissa, big themes today included public versus private markets, the implications of negative interest rate, and the fallout from the trade war with China. There were also mixed views on the state of the U.S. economy.
American economy is booming. It's absolutely undeniable.
We think that the consumer is the bright spot in the U.S. economy, but that CapEx and the manufacturing sector is obviously already in recession.
The short-termism of investors is what kills the long-term ability to compound. I think my biggest fear is that people are underinvested still from the hangover of 2008.
In addition to macro ideas, some notable investors gave their specific picks. Jim Chanos spoke about 2 shorts today, including that in Grubhub. The stock fell sharply after he revealed the position and criticized the company for, quote, making almost no money per order. Chanos also said he was short DaVita, a kidney dialysis company. Leon Cooperman said he's long WPX Energy and also likes Cigna. Glenn Kacher was bullish on Uber as well as SoftBank. He said Disney is his largest holding, a bet on streaming direct-to-consumer. Melissa.
All right, Leslie, thank you. Leslie Picker, who's been at the conference all day long there in New York City. Which pick would you go with or go against, Grasso?
I agree with Chanos on Grubhub. The competition is way too tight for them, and it's becoming such a commoditized business that they were the darling, and I think that now they're just getting thrown out. So I don't know how much lower it can go, but it does seem like everyone is lining up on a positioning standpoint to be negative on Grubhub.
You've got Amazon, right, that delivers food, and you've got Uber Eats, and both of those companies are willing to lose money on every single thing they sell.
Yeah, and so I'm not sure anybody's perfected the business model, but the valuation is what you can continue to go after in an environment where the competition is coming from all sides. So good for Jim. I mean, this is a stock that was $160 stock. It's traded, it's $140 stock that's traded down kind of in the mid 60s. The question is how far you push this short, and at this valuation, there's something left.
It's pretty fascinating that we have DoorDash. You have all these ones that are in the private markets. They're still funded by VCs. They're still actually being afforded to lose money to compete in this space. And I think it's really important to go back and remember that Grubhub and Seamless, they were both public years ago, and they merged. They recognized that this was going to be a really tough business. And this is a company that had $1 billion in sales last year, or this trailing 12 months, and had on a GAAP basis net income of $26 million. It tells you how competitive this is. It's going to be really hard for all of those ones that are still private to come out to the public markets. You're going to see more consolidation in this space.
I don't know where Mr. Chanos is short the stock. I mean, I think that does matter. Tim's right. I mean, this was $150-something stock. It's $60 now. Trades at still a big valuation. But you got to be, I mean, it's a scary stock. 32% short interest. You just have the headline, Shake Shack's partnering up with them, McDonald's. I mean, that's not insignificant. I do think there is further downside, but you have to ask yourself, you've seen what happens with high short interest names before and the violent moves to the upside. So I'd be a little bit scared of playing this from the short side at current levels, my opinion.